Good evening, everyone. Oh, sorry, good afternoon. Thank you, Kamalika, for a small intro. My name is Andrew. I'm in charge of business development for the B2 Broker group of companies. We build brokers, empower them with our tech, whether crypto, effects, everything related to this. And yeah, hopefully this panel, even though it's a bit surprising, the some of the early moments before, but definitely it would be a very productive session.
Absolutely. And we're going to cover a lot in terms of, how is it that governments in Southeast Asia, countries in Southeast Asia are picking up on blockchain technology, not just crypto. And we'll also try to bring out some of the interesting developments, especially from the regulatory landscape that's happening on digital assets and virtual assets in this space of the world. And we'll try to see if there's something that we can emulate from this part of the world for the rest of the globe. So, with that said, I think a brief one line about myself. I've been building fintech products in India. And India, if you guys know, is not very crypto friendly at the moment. The government is very scared of crypto. But that said, they're not scared of blockchain. They're experimenting with a lot of blockchain technology over there. And I've been lucky throughout my career to be a part of some of the very early stage initiatives in the fintech space in India. So, one thing that I would definitely love to look forward to and learn from my fellow panelists is how do we kind of build that trust in emerging technologies like blockchain and crypto, and how do we build products that really empowers our end consumers. So with that said, I think I would want to start off with the first question that I think is on everyone's mind here at IFX Asia, which is how do you think the adoption in crypto and other blockchain related assets is in Asia as compared to the rest of the world? And Andrew, I would love to start with you because you do have a, from a broker's perspective, you do have like a wide angle lens view of it all.
Yeah, surely. Thank you very much. Not only from the brokerage perspective, since we also have a crypto payment solution, which is extremely popular in Asia. And primary reason for it, surely I believe, that Asia is somehow more tech savvy in a certain way. Even though there is not aligned, unified framework for all the countries, like in the US, where the adoption may be slightly longer or may take slightly longer, Asia is more friendly, more open to such things, and especially in some Southeast Asia, we're not taking the biggest players like Singapore, where adoption is absolutely fine. And just recently, since one of the part of our team is going to token 2049, I've seen it in the group that you can even pay for taxi now in Toncoin, the native Telegram token, which is obviously the first step to the something bigger, and definitely this is where it's going. So speaking about Asia in general, in some Asian countries, people are more open to crypto sometimes even than to banks, and that's a matter of fact. Whether it's good or not, I presume there are way more to speak about this and to decide. But definitely, the open minding and of course, the Asia is always ahead technology wise. All majority of the main crypto project, main cryptocurrencies, crypto exchanges were all based in Asia, and especially the development in the region. Obviously, would find it will start with the biggest player within the region. So I presume, yeah, Asia has the top one priority, or maybe in terms of the countries who's going to adopt crypto in the nearest future. So as soon as possible.
Amazing. And I actually agree with you when it comes to, being technologically advanced, being technologically, I wouldn't say just advanced, but receptive to new technology. I think Asia does kind of hit it out of the ball. No, but yes. Coming to you, Sulan, because Binance is, I think it's become synonymous to whenever you think of crypto, I think retail traders typically do think of Binance first. So I would love to understand from you what you think is leading to the rapid adoption of crypto in Asia.
Similar to what Andrew was saying, Asia is more tech savvy. But why is that? We see, 4.9 billion people in Asia, and that's already more than half of the world's population. And a subset of that are like young people, people that are more experimental, people that already have the banking apps on their phone. So from that very broad perspective, I think it's quite clear. It's just the population that's moving it forward.
Young people, tech savvy people, that's probably, and they're willing to take that risk. So that probably makes crypto in Asia such a powerful tool. So thank you. And I think both of you kind of added on to each other's points on that. So Shekhar, I would love to hear from you. How does crypto.com view Asia as a market? And what do you think is driving the driving force behind crypto adoption
Yeah,
in
no, I'm going to
Asia?
echo what the two of them said for retail, right? Because I think you talk about adoption, you can talk about the customer adoption, you can talk about institutional segment adoption, and then regulatory adoption, right? And all three need to come together for something to really work. And so I totally agree with my fellow panelists on the retail adoption. I think Asia is probably ahead in terms of you're native to the technology you grew up with, right? It comes to you intuitively. So, like, we have a younger population that's had to leapfrog some legacy systems that just weren't available in Asia, right? And then they just went straight to the mobile first, right? And so you have that massive comfort level with anything retail, anything app centric. And so that goes in favor of Asia, not so much North America and Europe. From an institutional adoption, I think North America and Europe still hold, and North America in particular, holds the lion's share of liquidity, know-how, and willingness to take certain amount of risk. And so, like, Celine, be super familiar with this stuff, and so would you, Andrew. That's where the real pool comes from. Whereas the institutional space in Asia is a lot more fragmented. It's interested, it's growing, but it's a lot more fragmented, right?
So, and because you're talking about the entire institutional space, and because you also have a lot of exposure to what's happening in, say, Hong Kong and Singapore and all of that, what kind of regulatory frameworks do you see are actually playing out in favor of crypto in Asia?
That's a great question. So that ties beautifully into the third pillar, which is regulatory adoption, right? And so what we found generally, having a footprint globally at this point, like Binance does, is there is a lot more willingness in Asia and Middle East in particular now to actually engage with industry, right? So they want to co-create, which always helps because you have a conversation and then you have inputs into what the future should look like. Whether it's taken or not, it's besides the point. Sometimes it's not. But what we find in North America and especially in Europe at the moment is it is a rigid environment, regulatorily. Mika is supposed to be a panacea that cures all, but it's anything but. So we find that when we're trying to chart the path forward, trying to work out what the regulations and laws are that actually apply, it's a lot more complicated in North America and in Europe. So I think Asia probably has stolen a march, but I think Middle East has really stolen right at the front of what's happening from a regulatory perspective.
No, absolutely. And I think when it comes to mass level adoption, in a way, there is this fine balancing act that needs to be done. Where on one side, you have innovative new use cases, innovative new products coming up. And on the other side, how do you protect the end users? And that's where I think regulations comes into play. So how do you think, we should be engaging in a dialogue with the regulators to strike that fine balance? Sulin?
Well, I think firstly, um, with with Binance, we're always working with regulators to ensure that we put in the best practices. So there is always a misconception that increased regulator scrutiny will decrease innovation. That's not the case because with regulation, it allows you to understand what can and can't be done, and it kind of opens the area for more transparency, allows competitors into the market. So we think it's a good thing in general. Yeah.
So I actually agree with you because in India now, we're seeing a lot of focus on open banking and open finance. And even 5 years back, when open finance was just in its concept phase, I think one of the biggest concerns that traditional institutions had is if data becomes so publicly available, so easily accessible, then you're opening it up for a lot of hackers to scam people out of it. Versus today, well, you know what? The regulators are actually engaging in hackathon with developers to figure out what kind of innovative products they can build on top of what is India's digital public infrastructure. So I think that mindset shift, that's a huge, huge win, especially for any innovative financial products. But on that note, coming to you, Andrew, there is a lot of concerns around volatility in the crypto market. And do you think because of, especially like in a country like India, where there is still a lot of regulatory concerns or uncertainty about it, do you really think that this sort of an environment will lead to crypto adoption or more of crypto frauds? I know this is a very, how do I put it? It's probably going to be a very polarized sort of an answer, but I'm looking forward to something that's,
Well,
opening up. More questions.
True, it's a very conceptually important questions to begin with. Well, the volatility itself is a matter of fact because crypto would be volatile until the certain moment of time, unless it would be mass adoption. But still, if we're looking at the adoption, we need to divide, I presume, blockchain as the technology and crypto as is, because the adoption of the what makes crypto, what would make crypto adaptive or be adopted by majority of the countries. First of all, regulation, and secondly, the utility. So it's just like you mentioned, financial project or innovation project, which is just made to be done when there is no actual utility, just another one. That's a tricky thing. But as soon as the crypto may be utilized in everyday people's life, like the early example I was providing, paying a taxi, buying I don't know, paying your bills, paying whatsoever. This is where the crypto will this would be the first factor that literally we're migrating towards crypto completely. However, uh, obviously, since the market is relatively new comparing to the traditional finance, it's not only my opinion. I presume everyone would agree with that. Uh, it still have has to do a lot with additional products, somehow to mitigate the risk in those volatility and those cryptos, and somehow to prevent huge price swings, of course. So that is why exchanges like Binance and crypto.com and all of the biggest players, they have already done this. They introduce derivatives. They introduce some features and tools, to some leverages, we may put it this way, to control what is going on. And obviously, it's just a matter of time. The more mature market would be, the more uh, the more players would be, institutional players, as Sigurd just mentioned, the more stable it would become. Whether it will influence any kind of the speed of adoption or not, personally, I truly believe that we are like nearby the mass adoption. Just there should be some break even point, like somewhere, some regulations, some countries should become the first, and that the one which would be able to somehow be distributed across the line. So one benchmark, not very local, but the benchmark that can be used across Asia, across APAC, across Middle East, across Africa. One would be, well, this is where we would start. And obviously, it would be updating up to date, and because now the regulation in every single country is different. If there is a regulation, right? They are not even similar. They build on the traditional finance, which may not be the case. So it may. This is how we potentially may work with the regulators. I don't know if it would be allowed or not, but this is how we need to do it. And we actually need to explain all of the pros and cons, benefits, and sometimes obviously there would be some negative points as well. So everyone would see the clear picture. Can this be compared as with the traditional finance? Definitely it is. However, it's a unique thing, which we have never experienced before in the way we can find it right now, nowadays.
No, absolutely. And I actually liked your point, and I'm here, by the way, going completely off script because I loved the point that you mentioned about decoupling crypto with blockchain technology as an underlying technology and coupling it on top of traditional financial institutions. And I know I'm going off script, but yes, I would love to hear the view of everyone over here because we are seeing a lot of centralized institutions, like, for example, BIS, and they're trying to come up with new use cases like Finternet. And Finternet is trying to, in my opinion, and please don't cancel me for saying this, but I think they're trying to again kind of reinvent the wheel when it comes to a distributed ledger technology with something known as a unified ledger. And while there isn't really much of a technological clarity on how they're going to go about building that, I feel it's very important that we keep this in mind because they have the trust of the central bankers across the world. So do you see, and do, like, we'll start with you probably, Shekhar, but do you see any sort of synergies between such a new technology or an initiative? I won't really call, sorry for saying this, but I won't really call Finternet as a technology, but more like an initiative. But do you see something like Finternet or even Mbridge project that BIS is trying to pioneer? Do you see synergies between that and blockchain technology as such?
Yeah, no, it's a great point. I mean, it's something worth latching on to, right? What Andrew said. Um, the use of blockchain for anything beyond crypto has been around for quite some time, whether it's trade finance or remittances, or bonds, right? Like there are entities, companies out there like bond blocks, who take this market where you cannot buy into fractionalized, lots, and then they've managed to break that up, make it more accessible using blockchain. So this use of blockchain for financial cases beyond cryptocurrency has been around for a while. You know what the problem is? The problem is that trying to get people who give us the licenses to do this in different markets to agree that you should divorce the two and treat blockchain as actually more fundamental, right? And license it appropriately, not just apply your usual financial services licensing methodology, has been a challenge. In some markets, they've been more progressive than others, but that's generally been a challenge. Um, you know, there has been a lot of innovation even in the space of blockchain plus crypto, right? You have think about the protocols, right? You've gone from proof of works to proof of stake to authority, and now you have proof of tokens. There's this constant push at the boundaries of what we can do with these chains. How can we make them more scalable, cheaper, faster, right? And bring down the cost of a transaction, because that always racks up over time. So there's been innovation on all fronts, using blockchain as the basis, but it doesn't get talked about much because it's not sexy, right? But it is the rail on which everything else occurs. And what I'm really looking forward to is the point, right? The inflection point at which these chains all become cross-compatible. And that's also happening at scale, right? You're seeing more and more chains. You use bridges at the moment. And that's not great. You want to have seamless technology. I don't want to have to do like 3 different transactions to get from one chain to another, right? I don't want to have to work out, holy shit, if I go into that, how do I get it back? How do I redeem? What's the structure there? Which entities are in between? How can this go wrong? Because it can go wrong. But when we get to the point where it's seamless and it's embedded into a single user interface, and then you kind of leverage that and go, how can I then toggle between crypto assets and non-crypto, like TradFi assets? What's going to make that possible? Blockchain, right? So I think the future is in that direction.
No, that's actually an amazing point. And so recently in India, we just concluded the Global Fintech Fest, and I think a lot of what the Indian government is trying to do is to tokenize everything that's there in the real world. And blockchain, like you rightly said, can be the underlying technology for all of that. So there's a lot of power over there. But Andrew, I would love to hear your views as well on this.
Sure, I wouldn't agree more, to be honest with you. However, I would still believe that education is the key.
Yeah.
Because the more educated our society, the more educated is everyone involved into blockchain and crypto in general, the more they educated in terms of risk management, the more they educated in terms of what is it, how does it work, why this should be implemented, why, and so on and so forth, the faster the adoption would happen, the more freely regulators will act towards crypto and they will accept crypto in general. The more freely or the easier for some of the, from a business development side of the thing, would be easier because it would be more adopted, easier thing to understand. Just something very basic, very normal. So education is, I presume, the key, and really great that there is an opportunity to try to somehow be involved in that process during multiple of the events, expos, and this is the key, in my understanding, I would say.
No, I think I would circle back to the point that Shekhar made right at the start, which is, the people here, all of you are the future, because all of you are actually taking back a lot of insights from across, not just this panel alone. But on the point of education, I think I'll just quickly give like a brief segue into a very funny incident that I was once a part of. And this was in the initial days of UPI, or Unified Payment Interface. Now today, UPI in India, it's ubiquitous. It's everywhere. Like even, the small roadside vendor has his own QR code. No one haggles over change anymore. It's very hard to imagine that even 8 years back when UPI started, and I was like very young in the industry, so as a product manager, I was taking a lot of customer calls to figure out what their grievances were. One of the customers actually told me, I never authorized this payment. How did it go through? And she didn't realize that the PIN that she had put in was actually her authorizing the payment. So from there to today, where it just becomes second nature for people in India to kind of just scan and pay, that convenience of it, it's to do a lot with the initiatives that banks that I was a part of and the RBI in India has focused on educating people. So I think education and literacy does bring in a lot of trust over there. But there are, I think, 2 aspects to literacy. One is, of course, the end consumer literacy, and the other one is probably the financial institution literacies. And this is a challenge because a lot of TradFi folks are, they're not that tech savvy as the consumers that they're serving. So do you see that dichotomy kind of play out? And probably we'll start with you, and then Sue, I would love to hear from you as well.
Is, by the way, a very funny case. You know what I truly believe in? maybe it's a bit aside of the concept that we just discussed, but uh, predominantly, pretty much on majority of the crypto events, this topic is being discussed. At least at CBDC.
Yeah.
So this would make a lot as the push towards education, adoption, understanding, being tech savvy, spreading tech savvy approach towards crypto. So anyway, it has a lot to do with initiatives, as you mentioned before, of the governments. It has a lot to do with um, risk mitigation, everything pretty much that we each of us has mentioned, and it's absolutely correct. And this is where we're heading. I really hope, and this is why I truly believe this is why it's going to start in Asia, not anywhere else. Pretty much in Asia, whether it would be in China, whether it would be in Singapore, but definitely it's going to happen in Asia. Though edu- it is the fact that education is the key, but there should be a starting point. That's what I'm saying. There should be, at least in the form of common acceptance of something, technology or payment currency, for instance.
No, absolutely. And so I think I'd want to kind of add on to that in the question that I have for you, which is when it comes to public trust building, institutional trust building, have you, in your experience, especially because Binance is spread across the world and works with a lot of governments in Asia, so what has been some strategies that you've seen really play out well for you in that trust building sort of a piece?
Um, well, I think in general, what the public understands about crypto, it's not very positive. They are only taking in what the media is saying about crypto, like fraud, scams, jail time, whatever. But that's not the case, right? Blockchain technology is actually very traceable. So when it comes to business practices, like you said, education is really key, consistent education to keep telling the public, enlightening them about crypto, what kind of projects there are, how to protect yourself, basically from scammers and things like that. So having those kind of outreach efforts, even taking feedback from clients, listening, because education is a two-way process. We have to keep improving. So that is kind of like a consistent practice and strategy that we have to do over time. And the second, of course, is to have top class security. Obviously, when you're on exchange, you're holding users' funds. So that is your top priority. And at the end of the day, security is not just hiring competent security people, it's having the technologies on top of it. So your transaction monitoring, your risk engine, you have to make sure you have all those in place to ensure that you have a very proactive security team, as well as working with local law enforcement, which we at Binance do, to always have constant communication with what's happening with funds. So I think we just published an article last month that we saved about $2.4 billion of users' funds from scams and frauds and things like that. So those two practices on a consistent level, I believe, will, shift the public trust.
No, absolutely. I mean, I read a lot of the reports that Binance publishes. So thank you so much for, kind of educating all of us in this space as well. And it's very important that we also talk about not just the technology and how it's helpful, but also the kind of just make people aware of the kind of scams or the hacks that are there so that they can also be aware and protect themselves. Because at the end of the day, it's all about awareness. But coming to the point of awareness, what have you seen in your experience? Because you have experience across, TradFi as well as crypto. So in both spaces, I'm sure there have been similarities.
Yeah, there are. The thing we have to remember, right, is crypto is a bit of a Cambrian event, right? So if you study economic theory, what the life we have today, the reason why we're not peasants is because we have this concept of money supply, right? And so that was the first major explosion in productivity that led us to have much better lives collectively, right? It made the modern economy possible, but then nothing happened after that. Sure, there was securitization, but it's not really a game changer. And so crypto is a Cambrian event. It's an explosion, right? And so these things happen in two ways. Right? They either fizzle out or they catch on, accelerate till they get to steady state. So we're at the point of probably not going to fizzle out. Question is, how long does it take to get to steady state, and what does steady state look like? Educating people is critical to getting to that point, right? And so every education is good. I mean, it doesn't matter good or bad. Scams are good too. Frauds are good too in a sense because it helps to shape people's thinking about what we should be doing better, right? So I take everything as good news when it comes to crypto. If it's out there and people are actually getting exposed to this concept, all the better, right? I hate CBDCs, central bank currency, because it flows against the ethos of what crypto is supposed to be about. It's about decentralization. It's about not having a single entity or a collection of entities control access, flow, and distribution of funds. And so CBDCs run exactly in the opposite direction. But as much as I hate it, I like the fact that it's being developed because it leads to mass adoption in terms of knowledge, right? So it's good news for me. At the end of the day, people have a choice whether to use it or not. And then you said, UPI, right? Like, so when you introduce new frameworks, new things, it's generally because there's a gap in the market, right? And that supercharges the lending. So if you have high levels of corruption, high levels of money kind of disappearing through the cracks, accountability for fund flows, then having a digitized model nationally makes sense, right? That's just the case in India. Same thing with crypto. It's going to catch on fastest where there's the greatest need for it. So your path to making this work is to push it aggressively in markets which actually needs it, right? Places where traditional finance is sticky and selective and not accessible to most people, right? I think that's where efforts should be made, and I'm glad to see that efforts are being made in that space.
I'm glad you said that you hate CBDCs, because someone echoes my view as well. I mean, coming from India, I really don't see the need for retail CBDC in India because all of the proposed problems have already been solved for almost 8 years ago with UPI coming in. But yes, I think what the government is missing out on is on the cross-border payments. And to that point, I think, you kind of touched upon it, which is the money supply. And the reason why I feel governments in India no government agency in India wants to work with a cross-border on-ramp solution that uses blockchain or even stable coins is because they're scared of the money flowing out of India. And given how turbulent the rupee has been in the last few years, they don't want to see it sliding. And this is my personal opinion, of course. But I don't think they want to see it sliding. And that's why we're kind of not seeing adoption in stable coins and crypto and all of those. But to your point, will introduction of CBDC actually help educate end consumers about the power that cryptocurrency has? Yes, I definitely think it's potentially possible. Because just going by some of the numbers that are out there for the Indian market especially, so India is a populous country, as most of you know. There's 1.5 billion people. And over 93 million crypto wallets that are, with an Indian account holder at the end of it. When you compare it to the number of demat accounts that are used for trading in the capital markets, demat account is close to about 150, 180 million. So about 10% of the population versus 6% of the population into crypto. And the stock markets and the capital market has been around for 30 years. Whereas crypto caught on in India only thanks to the 2020 boom. Of course, it's a lot to do with the fear of missing out and the greed playing out there. But I think education, and especially a framework or being familiar to a framework like CBDC, could potentially help people understand what is it that they're buying into. It's not just provoked by FUD anymore. Sorry for using that term. But Andrew, what are your thoughts on that?
Maybe adding a bit on more on that, just for everyone. I just really hope that if someone maybe not that comfortable in crypto topic, they will not think that it's completely regulated and just Wild West. Of course, it's not. Especially with all the KYC systems, especially with all of the system which help, and they developed a lot. They developed for the past recent years, 3-5 years. Crypto market changed completely. I still remember how it used to be maybe 5, 6, 7 years ago. It was just crypto as is. Yeah, some transaction, lack of control, lack of understanding. Now, more day by day, more and more and more frameworks are coming, more solutions to track, to monitor, travel rules, so on and so forth. A lot has been done, and a lot is going to be done by not only government, by different companies, different vendors, so on and so forth. So a bit, maybe commenting a bit more in terms of the scam, like you mentioned before, which the word is not really, unfortunately sometimes that's a misconception, to be honest with you, because majority of the time what can be considered scam in this field, some of the new projects whatsoever, but from the utility perspective, as I mentioned before, it's all in stables, and transaction across the blockchain in stable coins, they are not even close, can be compared to the coins, unfortunately or fortunately. people using that for the sake of payment, not for the sake of some for the sake of trading. Obviously, as for us as the liquidity provider, especially for CFD, especially being wholesale crypto CFD, yes, the volatility and everything in crypto is a great thing because it boosts the trading. But from the perspective that we are discussing, obviously, it's all in stables. So it's there's no one way around. That's a multiple of concept, to be honest with you.
Very true. I mean, I wouldn't really call them scams because traditional finance too has a lot of scams happening in them. But Sue, to you, I would love to understand, how do you see CBDCs playing out? Do you think it's a threat to crypto, or will they work hand in hand with crypto?
To be very honest, I have no idea because every government, like I know
I
there's
love that. I love that.
substantial interest in doing it, but every government will execute it differently, will have different rules about it. So I really don't know. But what I do see is that this interest is good for our industry. They recognize the utility of blockchain, and utility is great. It breeds innovation. So I think it's moving in a positive direction that people want to build on this. But the outcome, let's see what happens.
Shikhar, would you want to add on to that?
Yeah, sure. To my bearish sentiment on the CBDC. Look, I think why is FX so complicated, right? It's because a fiat currency is a sovereign managed framework, right? And then everybody's trying to make sure, depending on what you do, you export or you import, you want to have a certain range of movement against somebody else's currency, right? And that's the reason why we have such a complicated FX market that's 24/7. CBDCs will run into the same problem because you're not going to get a unified approach among all the major currency players in the world and effectively lose sovereignty over their domestic currency, right? So we're going to run into the same problems. It's just on a digital platform. Great, because when people get tired of it, they'll already have adopted a digital element to money, and then they move into crypto private currencies, I call it that way, as opposed to state currency, state digital currency. The move into private currency will have less friction, right? And so it's a good thing, but just for the wrong reasons.
I agree, and I think the one thing that a lot of us, I don't think we forget, but yes, a lot of traditional institutions, they keep talking. The ones who are pro CBDCs, they keep talking about how it's got the trust factor of the governments backing them and all of that. But what they're actually forgetting is that cryptocurrencies wasn't meant for just one nation. It was meant for the whole globe. It was meant for any person who's digital. Thank you once again for iFX for hosting us here.